All right, this is the stock market short-term view. So I'm going to compare SPY and QQQ, give you the cycle analysis for the short term. This is generally a 1 to 3 week perspective. Normally I bring the longer perspectives and not the shorter ones, but I wanted to bring this one and also show you the conditions of these indexes using our new askSlim market monitor, which is for our level 4 members. I'm going to show you just the market monitor for these indexes, and I think you're going to find it really fascinating. Bigger picture, we were looking for a top in the market early in this year, and then a very serious correction in several waves, with the first one down and through March, where we expected to see a significantly weaker market. Let's take a look now as we switch over and take a look. Well, this is the TNX on the analysis that I just did, but we're going to look at the SPY on the short-term chart. Let me just move into this short-term chart right over here. So this is SPY, and what we're looking at here are the cyclic harmonics, which are on the bottom. That more digger dominant cycle right in here aligns with the Russell, which has been really a tell in what the market conditions are. These shorter cycles, as you can see right in here, how they align up in the market right here. And this one right here, which bottomed, this one was a little short, as you could see, and then this one a little bit long, and this is where that bottom is due. So we expected selling to come in early in the year and then move to the downside. Now, you can see on the bottom is the slim ribbon PO. This is our signal indicator and our momentum indicator that's based off of the slim ribbon right over here. So the stock market, the S&P 500, has come down into this support right over here. And the expectation is that it's going to get a rebound in here for the next couple of weeks, potentially. If you get a rebound in here and take out this low, that's going to be a very bad signal. But conditions in here are still okay when you look at this. The slim ribbon's still positive, and you can see that by this being green. The slim ribbon turned positive right over here, and it gave you that week and a half of upside move into that holiday, and it has remained positive. So the momentum conditions are not really changing a lot looking at the S&P 500. Now get yourself a good mental picture of what this looks like. Again, we said that, it's getting into support. It didn't get anywhere near these last lows over here, and now is in an area where it could give you a rebound. Then you would get a rebound in the market if you got the rebound that we discussed in the bond market. If you didn't watch that review, go back and watch it in the full show. And we expect to get a bond market rebound of a minor consequence, and that could help this stock market move up and maybe even move up and test that high at about close to 480 in the SPY. All along, we talked about the likelihood of a divergent top where the other indexes wouldn't do as well. Now, look at this picture right over here. It's very different when we look at the QQQ. So this shows you that same cycle and cycle right in here. This broke down right in the middle. It got down right down to those lows, didn't quite close below it, then rallied up here, tested the highs, and came down back to this level again. So this is where some intermediate supports come in, but this is a negative occurrence when you get this type of a shape. I also want you to see while the S&P 500 has held in here and has stayed positive, look at the slim ribbon PO. This is now red, and there's a red arrow right over there which says to you momentum has broken down in the Nasdaq, and all you have to do is look at the tape to be able to see that that is true. So we have that momentum breakdown there in the Nasdaq. That says to us that when you get the expected rebound in here, that this is a sell. And that's going to align and give you a message with the whole market. While the S&P 500 may get up and test the highs, this zone is the best that we would expect the QQQ to do. That's 389 to up here about 394.5. The center line right over there about 392. So if we got up over here above that 388.5 area, that's where I would begin initiating shorts we're going to expect this rebound to come right in here as we get into this rising phase. Note, rising phase, the rally, rising phase, but a deficient cycle right over here is this one made a lower low, this one equaled the lows, and you've got this kind of double top formation set up and this downward channel going on. And if you look at the bottom of the downward channel and look at the measurement, that's way down over here at about 343, which is a pretty reasonable target in March for us, depending on how this accelerates to the downside. So a very different picture. I'm going to go back and forth as you look at the SPY right in here, which has positive momentum conditions, the QQQ right in here, which has negative momentum conditions. Now, so I wanted to show you that and so that you could see the comparison and the fact that your guide is really going to be, well, can the S&P challenge those highs? How does the QQQ, the Nasdaq, do when it gets up into that resistance zone? And we don't really have the anchor point in here yet. We don't have a bottom made yet. So all of this could move into lower prices before we have that bottom set. I wanted to show you right in here, looking at our askSlim market monitor right there, and I'm just going to enhance that for you a bit and show you that. This is the market monitor, and what this looks at is our proprietary indicators, our reversal scout, our slim ribbon, the market condition indicator, and the option bias indicator. So what we have in here, looking at the SPY, all of a sudden the reversal scout, which is measuring it on the shorter term pattern, is turning negative, so that's turning down. The slim ribbon is still positive, as I showed you. That's compared to the negative slim ribbon here in the QQQ. The MCI market condition indicator is low in the S&P 500 and the QQQ. When it's between 25 and minus 25, it's really in the area of the, that's why it's orange and not red, of just slightly negative. But look at the IWM, that's minus 68. It's neutral here, reversal scout, you can see the mixed condition right over there. And the Dow Jones, clearly green, green, green all across, telling you the strongest conditions are there. So our option bias indicator, S&P 500, is still the highest level at 3.0. That tells you it's likely to give you the best rally, and these other ones right in here, the QQQ and IWM, are neutral. So you can see very clearly looking at this, the SPY is stronger than the QQQ, and the Dow is strongest of all. You can get this market monitor by becoming a level 4 member, and you will benefit from the amazing quality of that work. Again, what we're looking for here is a rally to begin sometime in the next several days for the stock market. It's likely to be substandard. I have doubts about it making a new high in the S&P, but we should likely do better than the QQQ, than the Nasdaq. The Nasdaq hits that sell zone. I really think that's an important piece of information right there, how it acts at that level, and the conditions overall better for the SPY and certainly much better for the Dow than they are for the QQQ. Like I said in the beginning of the show, buy strong and sell weak. I think that's going to be extremely important going forward.